Eric Muathe, Muathe.com, with a weekend analysis for the weekend of September 30th and October 1st, 2017. With about 40 minutes to go before the close of Friday's session and the last trading day for the month of September, this is how markets are trading, pretty much close to all-time highs, if not at all-time highs for the S&P 500. Let's take a look at those charts. In this video, we're going to take a look at general US market sectors. We'll take a look at commodities, take a look at some currency charts, take a look at the world view by taking a look at some world market charts, and then we'll take a look at the stock picks, which I sent Muathe.com subscribers on Friday. Since they are still timely, I want to show you what I was looking at when I sent you those alerts. All right, let's begin here with the NASDAQ weekly. Now we see the NASDAQ here, potentially, unless something happens here in the next 30 minutes or so. But the NASDAQ is poised to close at an all-time, fresh all-time weekly closing high. Now we are back above the previous level we had been watching on the weekly for the NASDAQ, which was 6387.75. Now we have known that as long as the market was above this number, then the market was net still bullish. So that breakout had failed for 1 week somewhere here, but the market recaptured the level above that. So in other words, we continue looking at a market that continues to be strong, and we had actually used two lines on the NASDAQ weekly chart for support purposes. It is this line here. As you can see, during the recent pullbacks over the last couple of weeks, we've been coming back and showing support on this line, ultimately giving us this daily closing lows there. There's also another line on the 3-year weekly chart. Currently, we had been looking at a 2-year weekly. If you take a look at the 3-year weekly chart, go back to this line because at some point it's going to become relevant again. And this line, the way I've been looking at it, was the line that gave us the previous resistance line, gave us a breakout here. And since then, market's been coming back and finding support when it backtests this line. So down the road, should we come back and do another retest of this line, then support or failure would give us a visual indication of where markets want to go. So those are the two lines on the NASDAQ weekly that we should continue watching net, because the market is above those two lines. And again, let me draw the previous line. Net, as long as the RSI is above those two lines, it continues to suggest a market that is sideways at worst and bullish at best. If we take a look at the NASDAQ daily, we can see that the daily is also poised to close at all-time daily closing highs. Right there. Also eclipsing and moving above the previous daily closing high. And for the NASDAQ, the previous recent daily closing high was at 6461.32, which is a daily closing high somewhere there. So as long as it is above this price on a daily basis, that's another fresh breakout. Short term, in the very short term, a pullback back below this number might be a sign of a market that wants to pull back in some degree. So anything above that number is bullish, anything below it might be suggesting a pullback is imminent. Now, if you take a look at the daily for the NASDAQ, if you're looking for a negative or potential negative, you have to take a look at the top side RSI resistance line on the daily, which is coming in play. So as we record this improvement day to day to all-time highs, we can see this is happening at the expense of the technicals, which are not improving, which generally suggests that the more we are rejected on this blue line, if we end up being rejected, then that suggests that there is a pullback that is in store around the corner here based on potential resistance. Otherwise, those who are bullish would like to see the market clip above that line and continue trending higher. Right now it looks like the market is looking like the next short term, and I thought might be days, might be a couple of weeks, short term, might be hours, but we are looking at potential for resistance on the hourly chart. Number one, right now, as you can see, we have an improvement to all-time intraday highs for the NASDAQ. But take a look at the technicals right here. Technicals are not improving. In fact, we can see that right now the RSI for the NASDAQ is struggling to hold above 61.8. Now this type of negative divergence where you see an improvement to highs but the RSI fails to move above 61.8, in my opinion, in my own research, tends to indicate is the most powerful negative divergence, which hour to hour, maybe even might lead to day to day, suggests that short term we are looking at a market that now wants to pull back. Additionally, we can actually even see that there was a break here of the previous highs, and that trend line break brings the market lower. We take that line and draw our resistance line, something like that. Now we see that we have rejection here on the line, which gave us that short-term high, and then there's another eventual break which coincides with that line. So another break here of this high, and we've been bumping with the resistance even here, which gave us that high, and now we are showing resistance here. So hour to hour, it would only make sense that the market starts being rejected around current levels unless it can actually clear the current resistance lines. Now if you take a look at the 30-minute chart for the NASDAQ, you'll see a similar type situation where we are coming to test a recent resistance or a break line here, which gave us a short-term pullback. And again, remember, this is for short-term trading, and this band of resistance has been where it has struggled on the 30-minute chart, gave us that short-term high before we get a shallow pullback here, and now we are still coming back to potentially find resistance again there. If we move on, we take a look at the Dow, and the Dow weekly, keeping it simple here and to the point, the Dow continues to break out and hold above the previous weekly closing high, and that level that was a breakout level was 22,092.81, which goes back to this weekly closing high, and this is, I believe, week number 3 since that breakout. So we followed through for 2 weeks after the initial breakout. That's a strong market. Don't forget that as far as the Dow is concerned, we continue holding above 69.1. As long as that is the case on the weekly, expect your markets to continue being strong. And if you're new to this concept, take a look at this example here that the Dow is giving us. It moved above 69.1 here, stayed above 69.1 until somewhere here. So throughout all this process, as we've been discussing for many weeks, as long as the Dow continues to show this type of strength, again, movement above 69.1 on the weekly, it stays above that level until the movement back below it here. So right now, since we are above 69.1, we still have to respect the potential for continued upside. Let's take a look at the SPX on its weekly chart. So we can see right now S&P 500 continues to break out successfully, again like the Dow. This is week number 3 since the breakout. So we've had 2 back-to-back follow-through weeks after the initial breakout 3 weeks ago. That's a strong market. And here we can see that the previous level, we can continue watching this because you never know. Should it break down below this price at some point, that's going to be a reason to indicate that the market is due for a pullback. This weekly closing high price goes back to this week here. So as long as we're above this price, the market should continue being bullish. And also we need to watch the RSI. So long as S&P 500 is above 69.1, the market is net sideways to bullish. Just like we saw with the NASDAQ on the S&P 500. Oh, by the way, as a visual, we can anticipate that the S&P 500 remains in an uptrend as long as this line is still intact. So this line that gives us the lows here, connects that low and this low. In fact, when we came and touched that line, we knew that as long as that line held, the market was due for a recovery. So as long as S&P 500 continues to hold above that line, we can assume that the market continues to be net bullish. Yes, we can get pullbacks, but as long as this line is holding, the market ultimately should recover back to fresh all-time highs. And at the same time, since the line is well defined, should we break below this line at some point, that's gonna be indication of a market that is now changing its makeup and might be ready and primed for a strong move to the downside. So right now, it's gonna take a lot of energy to break this market as long as S&P is also holding above 69.1 on its weekly RSI. On the daily, just like we saw with the NASDAQ, there is a line connecting RSI highs that is coming in play. And you can draw this way. So if we can clear that line, that will be bullish. So anything above this line, especially if it can jump above 69.1, that would also be indication of strength. So this is not the worst looking chart here. Yes, it might find resistance, but it's ever so close to 69.1. We would have to see a down day to confirm potential for a pullback. As an example of that, you take a look at this period here where we have an improvement day to day, little bit of a negative divergence, and that's what leads to these shallow pullbacks here. We do the same thing here, an improvement to intraday highs. RSI does not improve. That gives the setup for this shallow pullback. So we would need to see a down day before we can start anticipating that the market is due for some type of a shallow pullback, if not a serious pullback. Take a look at the hourly for the S&P 500. And this is something I was discussing with subscribers to Muathe.com as of yesterday. There's a line here on the S&P 500, which was the break of the highs there. We get a shallow pullback. And essentially what the market is doing is testing that line. So that negative divergence is a problem, and the fact that it's happening just a hair above 61.8 suggests that with rejection here, this looks like the worst type of negative divergence. So hour to hour, I would suspect that this is suggesting that we should be expecting some type of a pullback based on the market right now. There's also the argument that we are making an improvement in prices, but the technicals are not necessarily following through. They are making a lower high. So that negative divergence could be an issue. And also on the S&P 500 30-minute chart, we can see here that there seems to be topside resistance coming in play short term. Again, another layer of evidence that short term, this market looks like it could pull back. But now don't forget that this ultimately is within the major story here, which is that the S&P 500 continues to hold above 69.1 on the monthly. And this is true for the NASDAQ and the S&P 500 as well. So since about January, this market has climbed to the level above 69.1, and as a consequence of that, we've seen this acceleration. So the markets have been bullish to sideways in this phase. Yes, there have been shallow pullbacks, but here we are again at fresh all-time highs. And this is something we can borrow from recently here in about 2013, we went above 69.1, stayed above it for about 2 years, and it's only when we moved back below it here that we come off the highs. So the conclusion here is inescapable and very simple. As long as S&P 500 continues to hold above 69.1 on its monthly chart, expect your markets to be sideways to bullish. And that's pretty much the picture. Now the rest of the video is for subscribers to Muathe.com subscription service. Otherwise, the rest of you guys, I wish you guys a great weekend ahead, and we shall see you in the next video. By the way, more than likely I won't have a public version of this video this coming weekend because I'll be traveling, but we'll see how it goes. Otherwise, for Muathe.com subscribers, let's continue on.